welcome back to our YouTube channels. Our topic for today is choosing the best futures contract months for trading success. So the topic is not only to choose a futures contract months to trade, but choosing the best futures contract months for trading success. This is a common question being asked by many of you. So that's the reason why I'm choosing this topic for today's session. Now, as usual, before we start, if this is your first video, please remember to subscribe to our YouTube channel and on your notification bell. My name is Ting Ting. Now, we need to do a disclaimer before we continue with the session. Our topic for today is only meant for education purposes. There's no buy or sell call. Now, before we can answer what is the best months to trade, we need to understand what are the contract months available for you to trade. Now, so many contract months, like for example, with September, October, December, March, this is only for FKLI. Then for FCPO, you have even more contract months for you to trade. So first question is, what are the futures contract months available for us to trade? So we go back to the foundation of futures. First thing, if you want to know about our products, the first thing that we need to do is we need to look at their contract specification. So the contract specification would define what are the contract months available for you to trade. For example, for FKLI, if you refer to the contract specification, the contract months available for you to trade, for example, they have the spot month meaning the current month, the next month, the next two calendar quarterly months. So the calendar quarterly months will be March, June, September, and December. Common understanding for us. So for example, if you are going to trade FKLI, there are 4 contract months for you to trade: spot month, the next month, the next 2 calendar quarterly months. Then you're going to see, for example, right now is September. The spot month will be September. The next month will be October. Then the next 2 calendar quarterly months. After October, the quarterly definitely will be December. Then next year, March. Remaining, these are all spread contracts. So I'm not going to discuss about spread in these particular topics. So you can see that for FKI, relatively easier because we only have 4 contract months available for us to trade. But if you refer to FCPO, the contract months available for you to trade, there are relatively more contract months for you to trade. We can even trade up to 3 years ahead. Whether to choose which contract months for us to trade and what is the best contract months for us to trade, there are 2 key factors. There are many other factors, but we are going to look at these 2 key factors to determine what is the best contract months for us to trade. Now, the first key factors will be liquidity. Undeniable, definitely we need to look at the liquidity, because liquidity meaning that we can easily get in and get out from the market without forego any points, for example. Because the more you need to forego, like for example, if the market is not liquid enough, buyer and the seller, the bid and ask price is relatively far away, meaning that we need to forego more points for us to get our contract traded. Now, first thing is definitely liquidity. The second part will be the rollover cost, because futures contract will expire. When it expired, if you still want to hold on to your contracts, you will need to roll over. When you roll over, definitely involves minimum 2 contracts, because one closing your current contract and one open in a new contract months. So this is what we call as a rollover cost. So 2 key factors that we are going to look at is definitely liquidity and also rollover cost. So coming back to this, choosing the best contract months for us to trade. When it comes to FKLI, if you refer back to the 2 key factors that we need to consider, the first one is liquidity. So coming from this price quote, or your this is as per the actual trading platform, if you want to look at liquidity, definitely you need to look at the trading volume. Meaning the highest the trading volume, the liquidity definitely will be higher. So in short, if you base on that particular key factors, then you're going to choose September as your contract months to trade. Now, definitely, the next question people is going to ask me, can I trade October? Can I trade December? Or even can I trade March 2025 next year? If today is only 2nd of September, can I trade next year, March 2025 FKLI contract? The answer is yes. Now, based on the second key factors just now that you understand, which is the rollover cost. Let's say, for example, according to your trading strategies, you're going to hold on to this contract and you believe that FBM KLCI going to be a major uptrend. You're going to hold for a very long term, let's say 1 year, 2 years, or even more than that, 3 years. Then definitely, even today is September contract months, you can trade the March 2025 contract months. Then you do not need to go over from September to October to December, October to November, November to December, December to January, January to February, February to March. You do not need to go over the 6 contract months. So you can choose these, but provided that you do not trade too many contracts. So let's say, for example, you trade less than 5 contracts, or you have less than 10 contracts. Even you're trading those slightly illiquid contract months, but because you can save on the rollover cost, it still be worthwhile. But if you do not have any ideas, like at the moment that you wanted to trade for your FKL contract, you do not know how long you are going to hold, you do not know exactly what is your trading strategies, you can start to trade with the highest trading volume contract months would do. So at the end of the day, choosing which is the best contract months rely on the 2 key factors just now I mentioned to you. One is the liquidity, another one is your rollover cost. So if you have no idea about the rollover cost, then you just choose the highest liquidity, which is the highest volume traded. You trade for that particular month, you will not be too wrong. Now, when it comes to FCPO, can you see that there are many contract months? This is still not the end of the months available for you to trade. There are many months up to 3 years ahead. So again, going back to the 2 key factors for us to consider. The first thing, we look at the trading volume. So we choose the highest trading volume. You should not be too wrong. So for FCPO, normally we don't trade spot month or even the second month. The reason behind is because FCPO, when it comes to expiration, is a physical delivery. Unlike FKLI is a cash settlement, for FCPO is a physical delivery. With that, normally for retail, you don't trade these 2 months. So you can see that the highest trading volume is also the 3rd month. You can trade the 3rd month. Now, similarly, if let's say, for example, because of hedging, some of the corporate, some of the institutional clients, you do a lot of hedgings, or because of certain reasons, you have a very long-term market outlook or market forecast about FCPO, and let's say, for example, you are going to trade May 2025, can you do that? The answer is yes, because you do not need to roll over. You can reduce your rollover cost. If your number of contracts is not too high, you do not need to roll over November to December, January, February, March, April, May. You do not need to go through that particular process. You can directly go with May. You can save a lot of your rollover costs. But as I mentioned to you, one of the concept that is very important for you to understand, provided if you are going to trade a further month, your number of contracts is not too high. For example, if every time you are trading, let's say 1,000 contract, if you are going to trade, like for example, May 2025, daily volume is about 1,000 plus minus, then it's harder for you to get out from the market when there's a very huge volatility, or when your contract, you need to close your contract. It's very hard for you to get out from the market because the bid and ask might be far. You can see that this bid and ask is 84 to 88, meaning you need to forego 4 points. But if you're trading November contract months, can you see that it's only 1 ringgit Malaysian different per metric tons. So this comes to the end of my session. I hope that you can understand this topic, choosing the best contract months. And remember to subscribe to the YouTube channels and on the notification bell. If you have any question, at the bottom, there's a comment box. you can ask your question in the comment box. My name is Ting Ting. I'm going to see you in the next video. Bye bye.